Hi, and welcome to another daily recap. So, today I'm going to recap uh, December 11, 2024, and it's day 156. So, starting off with the euro dollar as usual. So, I started off with the fundamentals, and you can see that at 1:30 we are having three high impact newses. So, you obviously know what could be the impact of three high impact news at a particular time. So, starting off with the daily, you can see that the swing structure is bearish and the internal is also bearish. The price had taken the buy side liquidity of the strong swing high, and now it is possible that the price can take out some huge pool of sell side liquidity below this demand zone. So, zooming in to have more clarity, this is you can see that the price had taken out this buy side liquidity above. So now I am expecting the price to take out this sell side liquidity, but we must also consider that this demand is a high probability demand because it is formed via sweep of liquidity. So there is a lot of chance that this demand is a institutional demand zone. So we can't take it lightly, and we can't expect the price to take out the sell side liquidity without considering the risk factors. So that's why my daily bias is actually neutral because of these two criteria. So moving into the 4-hour chart, again you can see that the strong swing high has been liquidated and the price had chalked bearish. So yesterday I told you that this could be a fake break, and yes, it is. It is a fake break, and it took out all the sell side liquidity below with this large candle. So, uh, this supply is now holding. So this is a supply which I'm expecting the price to tap into and push the price down. But if you see from the bullish angle, then you can say that the price had made the pullback, and now it is all set to push the price up, and it has mitigated into the extreme demand zone of this internal range, and it has come to the discount prices. And this POI is not a light one, it is formed via the sweep of liquidity. So there is a lot of chance that this demand can hold and it can push the price up and probably take out this high. So everything is everything is a probability. So trading is a game of probability, obviously. So if you zoom in, you can see that this candle has taken out the buy side liquidity in the form of fair value gap. So it is always not necessary for the prices to mitigate into the supplies or the demand zones. That happens only when the volatility is very high. When the volatility is low, price can sometimes take out the buy side liquidity in the form of fair value gaps and start to push down and take out this weak low. So that could happen today. So zooming in into the H1 time frame, which is my main time frame, you can see that the swing structure is bullish and the internal is bearish, and price adds 50 buy side liquidity, which we already saw from the 4-hour chart. And also one more observation is that there is a low resistance liquidity alongside the weak internal low. So this low is now weak, so which becomes a major liquidity pool for me to target. Thus the shorts become high probability today. And actually this is not a new scandal, but because of lot of sell side liquidity being available downside, the price just rallied down and took all the sell side liquidity. So it is what it is. When your analysis goes right but you didn't get the trade, it hurts a lot. And also I was waiting for the price to mitigate into this POI, at least take out this buy side liquidity so that I can look for shorts. But even this POI is not a high probability POI, but the sell side liquidity is so large that I was willing to take a loss even from this POI, even from this low probability POI, and price did not even mitigate that one, so it just rallied down and took out the sell side liquidity below. So this happened before the stroke of London, at the stroke of New York. So soon after that one, we can say that when a large Moroboso candle is formed like this one without any inducement, there is obviously a buy side liquidity associated with it. So this would definitely trap the early sellers, and there could be a lot of stop losses resting above. So, and yeah, here you can see the institutions have stepped in. They liquidated the sell side liquidity and chalked bullish, which means that longs could be high probability, at least before the price takes out this buy side liquidity. So again, I marked this as my POI, and this was my lid. Again, I expected the price to take out this sell side liquidity in the lower time frame sell side liquidity before pushing up, but price didn't come down to take out this sell side liquidity, and it rallied up and it took out all the buy side liquidity. Especially my target was the buy side liquidity above this high because it was formed without leg inducements. So it could have been a beautiful trade if it happened, but it did not happen. So there is no trades on this day. And yeah, and price made chalk bullish. So I can continue to look for longs till the price targeting the 4-hour supply, but I must also keep in mind that I am playing counter internal, and with a strong rejection, there could be a possibility that the supply is stepping in and it could take out all the sell side liquidity resting below this news candle, which eventually happened. And price this is the high probability supply which I expected the price to mitigate before the London session. During the London session, yes, it mitigated, but after the New York session, and without any confirmations, I can't take entry. So it's heartbreaking day. The analysis was top notch, but I was not able to capitalize on the trade. Yeah, it is what it is. Like, it's not always our day. Sometimes price goes in your favor and you come empty handed. So that happens a lot, and we must get used to that one. So this is end of the day, and yeah, let's jump into GU and see what happened on this day and why I didn't get any trades on GU on this day. So the swing structure is bullish, the internal is bearish. The price swept some buy side liquidity, so I can expect the price to push down to take out the sell side liquidity in the form of weak internal low. So let's zoom in to the daily chart. Here you can see the price had mitigated the taken out this fair value gap, and this is kind of buy side liquidity sweep, but still the demand chain is holding. So I can expect, and also the price had mitigated into this demand zone. So I can expect the price to push further up to take out the daily target, and this bullish order flow to continue till the price mitigates this supply order flow. So that was my expectation, and that's why the daily bias I have set to bullish. And coming to the 4-hour chart, the swing structure is bearish and internal is bullish. So zooming in to see the intricacies, we can see that these two almost formed an equalize. So this becomes a low resistance liquidity for the price to target. Also, the internal structure is bullish, which means that this is also a weak internal high. Also, this is a daily target one. So this high is very strong and very weak, and I can look to target this high. And also, price had swept the sell side liquidity and it had chalk bearish, which means this POI is a strong one, and I can look for longs from this POI. So now you see that this longs idea is actually contradicting the shorts idea which we took from the EU chart. So we know that EU and GU are the correlating pairs, but when they contradict with each other, it gives us so much of confusion. But the wise thing to do is to trade both EU as well as GU as separate individual pair, and forget the idea that they are correlating with each other. So if you want to check the SMT divergence and those kind of stuffs, you can use DXY. So moving forward with the H1 time frame, the swing structure is bullish and the internal is also bullish, but the 4-hour supply is still holding. So anytime the price can push down and continue the internal pullback. So the price is kind of consolidating. So you can say that this is the IBOS up. I mean, this is a bearish IBOS, and all these were manipulations, and price can just push down. So to what I'm trying to say is, run, pull back. Okay, wait, one second. Run, pull back, run, pull back, run, pull back. So here could be the bearish IBOS, and all this could be the pullback, and then this could be a weak internal low. If I if this blue line of market structure mapping is correct. So from the current market structure mapping, this now becomes a strong internal low. So whether this is a strong internal low or not, that's a different. That's a major, that plays a major role when the price is near to that one. But since the price is not near to that low, so we can just assume we can just see what is the displacement that is occurring during the session, and we can trade alongside with that one. But the major portion comes from the high time frame narrative. So it's not just like whatever, if the 7 a.m. candle in the of the H1 chart is bearish, it's not that the day is going to be bearish. The thing here is the high time frame narrative and the resting liquidity, whichever it is, medium time frame or high time frame or 4-hour chart. If we have a correct resting liquidity, if we identify some resting liquidity which can be targeted, so that would be our bias. So here we identified that there could be a buy side liquidity above in the form of low resistance liquidity in 4-hour chart, and this is a daily target. So there is a lot of resting buy side liquidity which I can look to target for. So what should I obviously do? Wait for the price to mitigate into the demand zone, and look for the price to chalk bullish, and then look for longs. It's as simple as that. So I can even look to trade shorts from this POI formed during the Asia with liquidity sweep. So this POI was formed with the liquidity sweep. I can look for shorts till the price mitigates the 4-hour demand zone. So that's possible. I must be aggressive in my risk management if I'm taking these kind of trades. So whether I took or not, we'll see it later. So there are two demand zones with the 4-hour demand. Within the 4-hour demand, I need to wait for the price to mitigate the 4-hour demand and chalk bullish before taking the trade. I don't need to wait for the chalk bullish if there was only one demand, but since there are two demand zones, I need to wait for the price to chalk bullish. So price just rallied through of this demand zone, which means this extreme demand zone could be the high probability one. But still we are playing counterfractal, so I just don't want to risk my capital, so I'm just going to wait for the price to chalk bullish before taking longs. And yeah, this is the supply zone which which was created. This is a small reaction from this demand zone. So if this is actually a supply, because this bullish reaction didn't continue and it didn't take out the weak internal high, rather it got invalidated and it got pushed down. Why? Because the supply stepped in. So that's why this is called the supply zone. So if this supply gets flipped, then demand has taken control, then I can look for longs from this demand zone. So let's see whether it happened or not. No, actually the supply was in so much control that it flipped this demand zone, which means this is now a high probability supply. So now I can wait for the price to mitigate into this supply zone. So once it mitigates that one, I can look for low time frame entries and target all these low resistance liquidities right here. So this is actually phase C. So in OTE, high time frame supporting, no, because high time frame is strongly bullish, but I'm taking bearish trades. And this POI has 4 out of 8 criteria met. So it has displacement, it has made shift in the order flow, it is unmitigated, and it is formed during the kill zone, and it has flipped an order block. So it has it has almost 6 out of 8 criteria met. So it is a high probability POI, and it is in line with the MTF order flow. So it is bearish, so we are taking bearish trades, but it is counter internal. I must note that point. I think I didn't add this one, so it is counter internal. And what are the other confluences? There is no opposing demand zones right here, and there is a time based liquidity that I can target, which is the previous week's low, and there is also some low resistance liquidity which I can target. So what are the risk factors? There is a news at 1:30 p.m. So probably if I get tagged in, there could be a slippage, and I could lose more than I intend, or I can even get more than what I intended to. So it all depends upon the news and the fundamentals. And one more thing is that you must see that price has liquidated this strong internal low. So earlier we said that this could be either a strong low or a weak internal low, but for now, in my current market structure mapping, this is a strong internal low. So which means the price has liquidated this strong internal low, which means price could push up to take out some buy side liquidity above this POI. So there is no perfect entry for this one. So all I can do is wait for an LC1 or an LC2A or 2B to form, or I can even trade with confirmation entry. So if the price forms a fresh POI, I can look for trades. So anything is fine for me. A low resistance liquidity is being formed in the M15, which is good, which indicates that the price is going to go down. So all I want to see is the price take out this lid. So when the price takes out this lid, I can just go for shorts, targeting all this low resistance liquidity as my first target. But unfortunately, the trade got invalidated and the price invalidated the POI. So probably price just want to go above and mitigate into this demand zone, which I marked earlier. Probably that could be the case. And actually that happened. Price mitigated into this demand, but we can see it from the bullish angle is that this is a strong internal low. Price liquidated the strong internal low and it had chalked bullish. So if I see it from the bullish angle, this is actually phase A. So this is actually phase B. This is not phase A. So now the higher time frame is in support of my longs idea, and this POI has 4 out of 8 criteria met, and it is in line with the medium time frame order flow, and it is in OT. So what are the other confluences? It has swept previous day's low, it has caught the low resistance liquidity that I can target, and it has also swept the New York low. So a low resistance liquidity is there, structural liquidity to target, weak internal low is there, and there is also time based liquidity to target, that is the previous week's high, and and the demand chain is getting respected. So daily demand followed by H1 demand. But probably I won't be getting trading opportunity on this day, on this idea, because it's already 145. So another 5 candles to go. So price will definitely consolidate for some time, and all those 5 candles would be gone for the consolidation. So it is less, obviously very little chance that the price will come down to take out this leg inducement. But even if the price takes out this leg inducement, that would be out of the kill zone. So it's better to stay away from the screen and enjoy your personal life. So yeah, it happened. Price took out the lid, and it happened post New York session. And I don't remember whether the price went up and took out the daily target or not, but it played out. There was a strong rejection, and the price is now moving. At least the price can take out the New York's high. So anything could have happened, but that's not of my interest. Yeah, that is the end of the day. So that's how I didn't get any trades on this day. So it's a beautiful day. So I was able to change my bias quickly depending upon the price action. But the overall theme of my trading strategy is to have a strong high time frame bias so that I can take my lower time frames. I can, take lower time frame entries with confidence. So suppose if I don't have a proper high time frame bias, then I will definitely doubt my low time frame entries, and definitely I will switch strategies. So since I'm having a strong high time frame narrative, I am able to take with confidence the low time frame entries. So the high time frame narrative is the key in my strategy. So that's all I want to convey. So yeah, see you tomorrow on day 157, December 12, 2024. Until then, cheers guys. Bye.